I've got exciting news in the crypto world. FTX, a major exchange, is going through a $3.4 billion asset sale, including big names like Solana, Bitcoin, and Ethereum. This reflects their financial challenges and the evolving crypto landscape. Welcome to the Cryptoholics Corner, your hub for all things crypto. Join us as we dive into the world of cryptocurrencies, uncovering insights, sharing news, and demystifying the complexities of this exciting digital frontier. Stay tuned for enlightening episodes, and remember, the crypto universe is vast, and together, we'll navigate its depths. FTX, a pretty big deal in the crypto exchange world, is going through some financial troubles. To get back on track, they're thinking about selling a whopping $3.4 billion in crypto assets. And guess what? This includes big shots like Solana or Sol, Bitcoin or BTC, and Ethereum or ETH. But why are they doing this? Well, it all started when FTX couldn't meet its financial obligations and had to file for bankruptcy back in November of 2022. So, this asset sale is like their financial lifeboat to repay creditors and get out of that tricky situation. Now what's cool here is that this isn't just about FTX. It's also a sign of how much the whole crypto world is growing up. As the market matures, exchanges like FTX are getting better at handling their money and risks. But here's a twist. More mature markets might mean more exchanges facing financial storms like this. Still, it could also mean smoother bankruptcies that don't leave investors and creditors high and dry. So what's this big deal with this asset sale? Well, a few things could happen. The price of these cryptocurrencies might take a dip. Imagine selling a ton of crypto assets all at once. It could shake up the prices. Some folks might lose a bit of faith in the crypto game. If a major exchange like FTX is selling off its goodies, it might make people nervous about the whole crypto market. Getting cash in the future could be trickier for exchanges. If investors are wary of lending to them, it might be tough for these exchanges to keep the light on and expand. Now what really goes down depends on a bunch of stuff, like how the market looks at the time of the sale and what the bankruptcy court thinks. Let's break down why this whole FTX crypto asset sale is a big deal in a more casual chat. First off, FTX, which is like this heavyweight champ in the crypto exchange world, selling its crypto assets? That's like seeing a Fortune 500 company in the regular financial world facing some serious financial trouble. It's a big flashing sign saying, hey, something's not right here. Secondly, think of it like a Jenga tower. If they pull out a big chunk of crypto assets and put them up for sale, it could shake the whole tower. Prices of those cryptocurrencies might take a hit, and if you've got investments in those, well, it's not great news. Imagine your favorite stock taking a nosedive on Wall Street. That's the kind of drama we're talking about. Next up, if this keeps happening with major exchanges, it's like a trust crisis. You know, like when you find out your favorite superhero isn't as heroic as you thought. Investors might start thinking, can we really trust these crypto markets? And that could lead to less excitement and participation in the crypto game. And finally, it's like banks not lending money to each other. If exchanges like FTX can't easily get the cash they need, it might slow down the whole crypto show. Only the big, strong exchanges might survive, leading to fewer options for traders. But here's the kicker. If FTX manages to pull this off successfully and gets back on its feet, it could set an example. Other struggling exchanges might think, hey, we can do that too. That could change the whole game and how regulators keep an eye on these crypto exchanges. Plus, don't forget, if this keeps happening, regulators might tighten the screws on exchanges. They'd want to make sure these financial giants have their act together. It's like when your parents ground you after you mess up, but in the world of finance. Now this isn't just FTX's reputation on the line, it's the entire crypto market. It's like one superhero's bad day, making all superheroes look bad. That's not something we want if we're hoping for cryptocurrencies to go mainstream. FTX selling its crypto assets isn't just a business move. It's a ripple effect that could change how we view and trade cryptocurrencies. It's kind of like a real-life soap opera in the crypto world, and we're all watching to see what happens next. Now let's converse about the implications of a big sale of crypto assets by FTX due to bankruptcy. Here's the scoop. Number 1. Price drop party. Imagine you've got a bunch of your favorite snacks and suddenly you have way too many. You might not value them as much, right? That's what could happen if FTX sells a ton of crypto assets. The prices of those cryptos might take a hit because suddenly there's more supply than demand. This could make people less confident in the whole crypto market and make it tougher for crypto exchanges to get funding. Number 2. Trust issues. Picture this. You are at a magic show, and suddenly, the magician's tricks aren't so magical anymore. If a major exchange like FTX starts selling its assets, it could make investors doubt the whole crypto world. They might start selling off their own crypto holdings, which could push prices down even further. Number 3. Financing fumbles. Think of crypto exchanges like businesses. They need money to keep running smoothly. If investors become reluctant about lending money to these exchanges, it could mean trouble. Some exchanges might struggle to survive, and that could limit where you can trade your crypto. If the market's already in a slump, this sale could make it worse. But if things are looking up, it might not be such a big deal. The court could also try to sell these assets in a way that doesn't cause too much chaos. So what can you do to protect your crypto investments from this sale roller coaster? Well, here are a few tips. Number 1. Mix it up. Don't put all your crypto eggs in one basket. Diversify your investments. It's like not betting all your money on a single horse in a race. If one crypto tanks, you've still got others in your corner. Number 2. Homework time. Do your research. Invest in cryptos that you think have a bright future. This way, they might weather the storm if things get rocky. Number 3. Hang tight. Brace yourself for some wild ups and downs. Crypto is like the stock market's wild younger sibling. It can be super unpredictable, so be patient and don't panic when prices swing. One more thing, and it's a big other thing. Only invest money you can afford to lose. Crypto is exciting, but it's also risky, so don't bet your life savings on it, okay? Keep your investments sensible and you'll sleep easier at night. The sale of the crypto assets by the FTX bankruptcy estate is a significant development that is likely to have a major impact on the cryptocurrency market. It's a sign of the growing maturity of the market, and it's also a reminder of the risks involved in investing in cryptocurrencies. Investors should be aware of the potential implications of the sale and take steps to protect their investments. Thank you for joining us on this exciting journey through the world of cryptocurrencies here at the Cryptoholics Corner. We hope you've gained valuable insights and knowledge that will empower you in your crypto endeavors. Don't forget to hit that like button, subscribe to our channel, and click the notification bell to stay updated with the latest trends, news, and tips. So follow Cryptonauts. Until next time, keep exploring, keep learning, and keep prospering in the fascinating realm of cryptocurrencies.